What's up, guys, and welcome to this week's McInnes Marketing Minute. Jay, welcome to my humble abode, as we are quite literally in my humble abode. And in the spirit of everything Christmas, la 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 la, la 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 la.
Thank you for having us.
Always a pleasure, always a pleasure. But we're going to come at you today with the October numbers. So obviously we're now in November, if you can believe it or not. I feel like, honestly, like 2 weeks ago, we were all complaining about how long March was taking. And now we're in November.
It's been quick.
As Halloween gets out of the way, Remembrance Day has passed.
Christmas
and now,
decor everywhere.
Now we're on to Christmas decor. So
it was a pretty nice tree, by the way.
So yeah, so looking back at October, and it's the interesting thing, and this is not so much the interesting thing, but the theme with October rang very true to what we've already been seeing. The market is obviously vastly heightened activity, condos are down and whatnot, and that's why we don't want to focus too much on the specific numbers of this month because it's following the same sort of trend. The numbers are very high, but I'm going to coin the phrase, I think it's an artificial market right now.
Oh, that's a bold statement.
Yeah.
You didn't tell me about this before filming. What do you mean?
Well, okay, so for example, like let's look at how much, just in terms of percentage, how much we're up in terms of sales October last year versus this year. So for detached houses, 42.3%.
But let's keep in mind that pandemic aside, we are still in the fall market. So we've kind of continued on a typical busy fall trend at the tail end of this pandemic, which we'll touch on a few more points shortly. And that's comparing to just, 3 months after the market started to have a little bit of life, way back at the end of 2019?
So, and I'll finish this. So attached houses are up 13.4% and townhomes 45.9%.
Big jumps.
Huge jumps. And when you look at like the sales to active listings ratios, they're way up there. So we've said many times before, below 12.
Below 12.
Below 12 puts pressure on prices downwards, 12 to 20 to buoyant balanced market, and above 20 puts pressure on prices upwards. And we've been at above 20 for all fields for a long, long time now. So,
I was just thinking, side note, we haven't had a this is all fake, the market's about to crash barrage in the comment section for a number of months now.
It's been a while.
It's getting a little boring in the comment section.
Starting to miss it. But
sorry to interrupt.
So detached homes right now, the sales to active listings ratio is 30.9%. So well above that 20%, which it has been well above for a while.
For a while now, yeah, for sure.
Townhouses are at 43.5% sales to active listings ratio. That's ridiculous. It's almost the same amount that it's increased year over year. Yet, or a but maybe, you don't see these type of reflections in the pricing moving upwards, even in multiple offer scenarios. You're not seeing a $1 million condo go for $1.2 million. You're not even seeing a $1 million condo go for 1.1. You could see a $1.1 million condo being listed low and going closer to that 1.1. However, you're not seeing the prices rise. I mean, in terms of benchmark pricing, attached houses have stayed exactly where it was versus last month. Detached houses have gone up 1.1%, very steady, and 0.4% increase in townhouses.
So what I was going to say before, I think with the whole, again, looking back to this kind of pandemic-related decisions in the market, I'm not surprised at all that the townhomes have stayed that strong, activity-wise, because going back to that theory that people are leaving condos, leaving common elevators, leaving towers, leaving downtown and all that, I don't think it's a mass market thing. However, if you look at the townhomes being the next step up from condos, in that progression from condo to townhouse to house, you're getting a lot of consistency along that story of it's again, it's hot, not a reflection of price, but activity is very consistent there. And even with the detached to those numbers in North Van this week, the deal we did, everything we were looking at, kind of North Van, this is in that kind of mid 1.5 range, but everything between 1.5 and 1.7, all multiples. And the activity is there, and the showings are busy, and they're getting offers, but to your point, the pricing is not flying up, like
Yeah.
we've seen in past multiple environments.
And that's why I think it's artificial, because to me, right now, those townhomes are the bridge between the gap between detached and condos. So while that provides, obviously, the bridge now, there are not anywhere near as many townhouses as there are condos. So as people start to get more comfortable in townhouses, will that then trickle onto the condos? Back to our video a couple of weeks ago where we were talking about, is it maybe time to start, preparing for a condo surge when that price range gets unobtainable?
It always comes to that point where we've done this video, I forget when last year, but the gap between condo and house got
Close.
So close that it made sense, not sense, but it made financial logic that you could make that jump substantially easier at that time, for example, than you could right now. So the townhouse is kind of, I think it's always going to be there as that perfect little middle ground, and will be pretty consistent. It's been pretty consistent over the last handful of years. Now it's pretty extreme, but with just the general price gap between condo and detached, I think it's always going to be a very welcomed option.
I'm, to be honest, more interested in now what's going to happen as we start moving into like winter and Christmas, because typically, as you mentioned at the start, we're in a busy fall period. Fall is typically more busier along with spring in Vancouver real estate. So as we move towards the winter, we've now got the announcement of the 2 potential vaccines that they're hoping to push out by the end of the year, and then further on, a few months from now, hopefully dissemination to all around the world. Whatnot, are we going to see that slowdown in activity, one, happen in the same way that it usually does each year, and two, are we going to see that slowdown, if it does happen, have a knock-on effect and it will slow the rest of the market down, kind of a grinding halt after such a busy time? Or is it just going to be a blip in the system, and as soon as time is gone, Christmas has gone past and the season to be jolly is done, it's going to be the season to buy?
I think as we saw markets coming up literally from 2010 to 2018, the annual kind of activity gap line, we'll say, when the summer was really busy and had a lot of inventory, and the winter obviously was the fall off time, a lot less inventory, a lot less activity. That arc line just flattened year over year, and you were starting to get a very specific slowdown for that December, and then it'd pick up for the spring, and then that turned into, it would start pick up in February, and then in middle of January, and then it just rode right through when the market was getting really crazy. So I think this year we're going to see a typical kind of light slowdown. I don't think it's going to be grinding at all. And I think the more I look at this, I lean into looking at the stock market and money that's being deployed into the markets that way, and is a reflection of how much the consumer is willing to put on the table in the form of that, and in our case, in the form of real estate. And I think that's a much faster moving market than we're seeing, but I think we're going to see that trust in markets continue on in real estate, and I think it's going to be a slight slowdown, and then it's going to keep going, unless something catastrophic changes with lockdowns and all that sort of stuff.
Well, this is why I'm super interested, because when you look at that same graph you're talking about in the real estate, or Vancouver real estate history, whether it's been an extremely busy extremely busy year versus a very quiet year, you still see those same trends. They're just exaggerated.
For sure. Yep.
During
Definitely.
the busier times, it still follows the same. So I'm interested to see what that looks like as we come out of Christmas and start moving into January and February, and how that is going to lead up for the spring market.
I think as we saw comparing these numbers, the end of 2019 up until March was getting crazy. Mm-hmm. We've had this whole slowdown and halt and pause and whatever, but I believe that kind of come March again, it'll be
busy.
Moving, be busy. Rates, I don't think are going to jump up anytime soon, and the market's going to have the belief behind it, and now cheaper rates to push forward with.
Well, of course, we don't have that illustrious crystal ball, but we will see. I will point out that a lot of the predictions in which we've said
they're all true. Every prediction we've ever made has become true, so we technically do have crystal balls.
So we are making a controversial prediction now, because a note on the tolling in Metro Vancouver.
We've got an update.
It got
Finally
approved.
It did.
It got approved to the dismay of many. It was a pretty close vote. I think it was actually 4-3. There's going to be plenty of opportunity for the public to weigh in, for businesses as well. So just because it's been approved doesn't mean that it's actually going ahead. This is where our prediction is. We don't think it will actually go ahead.
No, I think reality will set in that it would very negatively affect the businesses, which even if the market gets rolling again, the market, the economy in, for example, Vancouver, where this is kind of the wall around, it's not like it's going to be back up and running and no one's going to still be hurt from this whole pause. So I think reality will set in. They said decisions will be made by some point 2022 after all of the conversations and talks and sit down with various groups. I don't think it'll play out. It's kind of a ridiculous talking point, but...
We need to take a note out of the UK's books. Okay, no, hear me out on this one. Hear me out on this one. They threatened to put tax or increase taxes on alcohol and pastries, but not sweet pastries. There's like pasties.
Just gotta get them when they're down. Just
it's basically like
hit them where it hurts.
Typically processed meat in which doesn't make it sound good, but it's delicious in various different I'm trying to think of like the pastry surrounding outside.
The crust stuff.
Yeah, like crust, like phyllo pastry and stuff like that. Anyway, various different deliciousness. It caused such an outrage that they rioted in the UK and the whole thing got scrapped.
So what you're saying is we need to riot like the UK to lose the tolls. Okay, that's an option.
You heard it here first. Thanks guys, see you next week.